My goal for the Plato project was to learn how to invest in the stock market. The reason why I was so interested in this is because the month leading up to this project, all you could hear on the news was the markets going up and people making money easily with stocks and cryptocurrencies. I started with 3 weeks of research and then started investing on February 25th. Before we start looking into what I invested in and how I did, let's talk about what stocks are. A stock represents a fraction of a company. Each unit of stock is called a share. Shares of public companies are traded on a stock exchange, and if you own shares in a company, you are called a shareholder of that company. There are several stock exchanges in the world. The biggest ones are the New York Stock Exchange and the Nasdaq. I decided to focus only on stocks, but there are also other types of securities people trade. The way to make money is to buy shares and sell them at a higher price, so your gain or loss is the difference between the sale and the purchase price. Some companies also pay a quarterly dividend to their shareholders. What is important to keep in mind is that every time someone buys a share, someone else must be willing to sell it and vice versa. Therefore, the price of a stock follows the law of supply and demand. If more investors are interested in buying a stock than selling it, the price goes up. If more are interested in selling them, then the price goes down. Although initially I planned to invest real money, luckily I decided to start with a simulation. So on February 25th, I created 3 mock portfolios of $3,000 virtual dollars each. For the first one, I decided to follow the advice of one of the most legendary investors alive, Warren Buffett. He recommends simply investing in the S&P 500, which represents the 500 largest companies in the U.S. For my second portfolio, I decided to invest in the stock of 4 companies I liked and believed in. Netflix, because almost everyone I know uses it and they keep producing great shows. DoorDash, because they have grown a lot during the pandemic, and again, we all love using it. Southwest Airlines, because we emerged from the pandemic, and as we emerge from the pandemic, I believe that people will travel more. And Ulta Beauty, because many people are buying from it these days. I bought and held onto the shares, and I bought in that portfolio. For my third portfolio, I used the same stocks but decided to trade actively, selling and buying when I thought their price would go up or down. Later, I also added Twitter to that portfolio. To track my portfolio and also read news about companies and the market, I created an account on the Yahoo Finance website, which I highly recommend because it is simple, free, and has a lot of information. So, after exactly 11 weeks, this is how my portfolio did. The most conservative lost 8.2%, the one where I picked and held on to 4 companies I liked lost 19%, and the one where I actively traded lost more than 28%. There are obviously a lot of lessons I learned. The first lesson is that picking individual stocks is very difficult and maybe impossible. All 5 stocks performed very differently. In particular, Twitter shot up when Elon Musk announced that he bought 9.2% of the company, and Netflix lost almost 40% of its value when it announced that its number of subscribers had declined for the first time in its history. My second lesson is that timing the market is impossible. On average, the S&P 500 goes up 8% per year, but in the short term, it's very difficult to predict if stocks are going to go up or down. For instance, exactly when we started the Plato project, the market started to drop very quickly because of the war in Ukraine, inflation, and the Federal Reserve increasing interest rates. Therefore, it's important only to invest money that you don't need in the short term. To show how random these movements can be, a programmer used a goldfish called Frederick to decide what stock to buy and sell from November 2021 to January 2022, and he beat the market by 13%. Lastly, my third lesson is that simulation is always going to be different from reality. I was much more willing to take big risks in order to see if I could produce big gains because I wasn't going to lose my real savings. The events that will influence the market in the future are unpredictable and different from the ones that occurred over the past 11 weeks. Based on my experience during this Plato project, and because I believe the markets will start to stabilize soon, I have decided to invest 500 of my own savings in the S&P 500. I will continue to listen and read the daily news to understand how it influences the markets. I am also going to start exploring what it takes to make a career in finance. Thank you so much for listening to this presentation on my Plato project.